Good morning. Welcome to Options Tender. It is Monday. Happy New Year, everybody. The market is closed today. Want to put out an extra video on the weekend with big tech. What is big tech telling us? What kind of story is are they trying to give us hints of which direction the market may go? Usually, and by usually I mean always, wherever big tech goes, the market goes in general. Okay, so if you are new here, go down to that bottom right hand corner, hit that Options Tender logo, and subscribe. And don't forget to hit the likes. It really helps this channel grow. We do appreciate all of your help in 2022 growing this channel, and we're just getting started. So here we are. I'm going to start off. If you check out Friday's video, that's a full update on the market using SPX. Now this today, I want to focus on the big tech, but I'll just give you a small version of ES, a quick version, I should say. Okay, so ES on the monthly time frame came to check this box back here, breaking back down underneath the 8 EMA. We're in a downtrend. The downtrend continues. And I tell you, the argument is going to be, let's go down that weekly time frame. The argument is going to be, we're kind of triangulating here, but people are looking at possible inverse head and shoulders where we're forming the right shoulder here. I don't see that as defined. It doesn't look right to me, but that's what it's potential. All right. Huge rising wedge from the Corona crash. We're not even back. This is one leg of a massive bull market. So if that gives you any perception that this is a huge correction, it's not. It's possibly just the beginning. All right, on the weekly time frame, lower highs, lower lows, triangulating from the 200-week moving average, also coming down here, breaking off of the 50-week simple, and right in the middle, right where this 8 EMA kind of moving sideways, the 20 simple moving average sideways, and so we're right in the middle. Consider that neutral on the neutral to bearish because we're in a downtrend on the weekly time frame. On the daily, and then we'll go over to tech. On this daily time frame, started correcting in this channel, broke down from it, and just in the holiday week, we've just been going back and forth here, consolidating. Will we break up or below? We talked about that in depth on Friday's video. If we break below, this scenario will happen. If we break above, this scenario is happening. We won't go back through all of that. I'll tag the video at the end, and also it should pop up above. So let's go ahead and start off with Apple. And we're going to start off with the monthly and work our way down to the daily. And I really don't even want to focus on the daily. It's just really the monthly and the weekly. Just to give you a perception, look at this massive move from Apple. Had some divergence breaking down, but actually hasn't been broken trend yet. And, the divergence says it's going to. We're right on that trend line. We start cracking this area, right in this 120. This is a higher time frame, so let's call it 125 to 130 area. Start breaking down from there, and it's just a huge, huge loss of trend for Apple. Apple has not been touched yet by any of this weakness in the market. So that's why we're picking on Apple first, and then we'll go to Microsoft after, because these are massive leaders in the market, and if these bad boys start to crack, then that it doesn't matter. Almost doesn't matter what any other stocks are doing. They're probably going to follow along from order flow from the market. So here's a weekly. uptrend, broken. It's broken down, retested, and now making lower lows, lower highs. Now we had this channel from some time back. That's what we're testing right now. It also coincides with this. If you notice a little triangle here, that's kind of like that bow and arrow that we talk about a lot. Bow and arrow support resistance. We're right at that as well. So a little confluence, and then we start to break down from there. We have the 200 week below with support as well, but kind of in that range where, hey, a lot of activities happening. There was a lot of back and forth ping ponging, and then the huge concern would be to start breaking down from back into this channel, but losing that 200. Once you get into this type of area, there's not a whole lot of volume, so the movement should be fairly swift. And on that daily time frame, I don't even have to show you the indicator. All the indicators are just pointing down. On the daily, just having a reaction off of the support there, but we're watching this triangle pattern break, and usually triangles are in a wave 4 or B type situation. If we're more bearish than this, if this is a B or a wave 4, then you would be expecting this to conclude. Maybe that's a wave 5 ending, and then we start going to the upside. If it's a B, an A, B, C, yeah, I would expect more of the A to shine down here in the B. So we'd have an equal length. So we'd have further to go down. A couple ways to look at it. And then if this is all one big leg here coming up next, this would be certainly a wave 1, and then you'd have a bunch of 1, 2, 1, 2, 1, 2 tightening up into that triangle, and now releasing all of its energy, and then you start not in a straight line, but you start descending probably down to the bottom of the channel at least to head to test that gap. All right, and I think that's a little bit more of the scenario we're looking at. There's more gaps down below. Microsoft. From the monthly time frame, as we go through these, look at this massive move. I mean, we haven't scratched the surface yet. Microsoft already broke down its major trend line and back tested here. So we're underneath that 8 EMA trending to the downside. So that's already in trouble. And I just want to point this out because there's so much room to move for a correction. Even if this is some sort of, if this is a 1, 2, and this is all a 3, and we're wave 4, yeah, we have plenty. I'm not going to go through the calculations, but plenty of room to make some sort of big sideways correction before moving higher. I'm not saying the stock is dead. It just has a lot of room to move. So heading down lower would not be a surprise. Everything, the indicators, all lower highs, lower lows. Let's go down to the weekly. Here's a better look at that trend. Broke down from that trend line, and now obeying this downtrend line here. And then we have some support with the 200 week moving average right below us. And like I said, that's what we're looking for. If we start cracking, breaking down from this area, then I think things will accelerate even faster. There are a lot of catalysts coming up throughout the week. The weeks to come with earnings and CPIs and FOMC and all these things. So that's there's a bunch of catalysts that could do it because the market's so sensitive to economic data right now. But okay, so again, that large trend line, we're in a channel. Channels only last for so long. If you're getting to like wave 3s, that's when you start breaking down from channels. So far, the channel's held. We're in it. We just broke down from an ascending triangle, and starting to make some moves. So I think we have to watch price action. That's always the most important thing. But I think this move is actually going to start to break down from this channel and head lower. And we still haven't even tested the Corona, the 2020 highs there from the Corona crash. That's how I guess small this move has been. Let's go over to Amazon. And the rest of these aren't as important anymore. And the reason why I say that is because they've already had huge moves. So we'll start off with the monthly on Amazon. Broke down from its trend and just, huge moves, but clearly we have so much more we could do, so much more damage. But this is no longer, as important of a leader to the downside as Apple and Microsoft would be. And just to save you some time, there's not much to look on there. We might find some support in this area, but we start breaking down from this area, and there's not a whole lot happening. And so let's see, what are we missing here? We can go to Meta. Meta is the same situation where it's come down so far that I'm actually getting a little bit bullish on it, in a sense to where this correction, this was from the IPO. If this was a wave one, for example, this full length, yikes, and we're trying to track a wave two, so this is a retracement from bottom to top, that move. We're down to the 78.6, which is a fantastic area for a possible wave 1-2 setup to the upside. If that's not true, and that's not the real setup, then maybe this is a 5-wave move down, and we need a 3-wave move correction before another 5-wave. That would be a zigzag. And so when you get these zigzags, this correction should be 50-60% of the retracement of this initial move. And so that's why I'm pointing that out in this, and so even just correcting, there should be some nice bullish moves, and maybe that happens when earnings comes out and it really gaps up higher or something like that. But this one's almost in a bullish stance, unless it's Meta is just done forever and then just keeps going. Google. Google still holding its trend. So breaking down from that, again, that's what we're going to be watching for. Starts to break down from this trend line, then Google is probably going to start accelerating. And, that's still a big boy right here, but, nowhere near Microsoft and Apple anymore, but same thing. So Tesla. All eyes on Tesla, and it's sort of in a situation where Facebook sort of was. And so this thing could keep coming down. It doesn't have a whole lot going on until, some of these levels down here or this uptrend. And so this might tend to fill out and test the trend line before anything else starts to happen. So we're just in a downtrend, really start to move from that point. And this could be a 1-2 setup where we're in wave 3. We have a consolidation for 4, 5, 4, 5 to test that. So there's different scenarios that could happen, but this is everything bearish about it. And the last one, NVIDIA. Now, NVIDIA, it's not. It's a large company, but it's not a massive company that's going to bring down the market in itself. But still, the same situation. We're just now breaking these trend lines. When you break a trend line, we have plenty of time to and space to move lower. And this one just broke its uptrend, back tested, and also reacted off of the downtrend line. So really pulling back just a little bit again, we could be talking a test back to the $75 area. That would, that's almost cutting it in half. That's about cutting it in half from this point. That's 50% move. And I could see that happening. That'd be in my mind, a fantastic buying opportunity, and I'll be looking for that. But there's nothing really in between after you start breaking these levels here at the 125. Had a great reaction off it, but now it's going to, somewhat, I guess, mirror when you have a move like this to the upside. This should kind of mirror that, and we came down. That's why you have head and shoulders. That's why it's very symmetrical, and maybe we're forming that kind of area right here to, you consider that somewhat of a right shoulder, and then we start heading lower again pretty aggressively. There's probably not much volume through there until you get to some of these levels here of demand. So that tells the story right there. I just want to give you a quick upper view of these stocks. The tech market is just now getting started in a sense. Once we're breaking these trend lines, and so that's the story that they're telling. They're getting weak, and they're going to lead the market to the downside. Everything else, a lot of these stocks have been hit 70-80% for the growth stocks. They're already done. They might inch down a little lower, but an accumulation phase would probably start as this market is getting in the depth of its move to the downside. And just to give you a bigger picture, I showed this on, I don't know if I showed the Elliott wave on Friday. I don't remember, but I'll just give you an example. And in order for this to happen in this bear market, let's go down to the daily. In order for this scenario to happen, 1, 2, and then 3 all the way down here, and then you break it up for 1, 2, 3, 4, 5 down here. In order for this scenario to happen, you're gonna have to. There's although the growth stocks already down, you need the mega tech stocks and Dow stocks to take the load now. And if that starts to happen and they start breaking their trend lines like they are, like they've proven, then this is our scenario that we're looking for, all the way down to a possible 2,200 or lower. That would just be a wave C or 3, and that it's possible that that would be over by then. But there's another scenario where we can go even lower, because that just brings us down to test the Corona crash. This huge ascending triangle that was the last move there. That was an ascending triangle that broke down, and it's very typical for the measured move for ascending triangle just to retest its bottom where it started. And that's all we're looking for. At that, you think this is a massive move down. That's just this leg of a huge 15-year bull market. So I'll stop rambling on. I'm just saying the potential is there for this to be an actual 5-wave move down before correcting, like I was talking about with Facebook, correcting, and then a 5-wave move down for a zigzag to start a new move in a new bull market. Possibly. So, but that's way out in the future. We have to take this day by day. That's what we're looking at. Thanks for joining us. Please like the video, and we will talk to you soon.